Supply chain disruptions have impacted the video gaming space as well. Hardware and software production have slowed since the start of the pandemic, but our next guest expects the video game business to reach $321 billion by 2026. Stephen Gardner of ETF Managers Group joins us now for this week's ETF report brought to you by Invesco QQQ. So good to have you back on the show. Walk us through this prediction here.
Thanks for having me. And it's not just my prediction. It's a number of different analyst predictions. I mean, we saw huge acceleration in growth in the video game market, with the stay at home. And we saw about $180 billion total sales there through the year 2021. So, a number of different research analysts across the board are expecting this $320 billion market across hardware, software, and different console and mobile games.
So what do you make of this recent pullback in the gaming space? And Rochelle mentioned those supply chain issues. Is gaming recession proof if we are to enter that type of environment?
I don't believe gaming is completely recession proof. I mean, it's at the end of the day, it's a discretionary spend when you think about, the total cost of living. Gaming and interactive experiences is certainly discretionary. I think we're going to see volatility in the market if there's continued sell-off, typically has a higher beta than, overall kind of blue chip tech. But, I don't believe it's necessarily recession proof. But over a long term, we think, the total growing addressable market will drive, a lot of growth within the space.
Stephen, there certainly are a lot of players in this space. When you're trying to decipher the winners and losers here, because we certainly have seen a mixed bag of earnings over the last couple of quarters from a lot of these larger players, how are you evaluating, who has the biggest potential here going forward?
So that's the beauty of the ETF. It's a passive ETF. We rebalance on a quarterly basis, and we're not picking winners and losers per se. We're including companies that meet our rules for the inclusion within the index, and betting on the entire market to move forward and progress in terms of revenues and asset prices higher. So we're not making individual bets, but more so a concentrated bet within a theme within the tech market.
Stephen, one of your top holdings in there is GameStop. We noticed certainly a meme favorite. It has posted annual losses now for years. Doesn't this add a little bit of risk there?
So GameStop's an interesting use case. It's been in the spotlight with the meme stock trade, obviously. And when we look at it, they're trying to make a transition from this brick and mortar retail type video game company into an e-commerce Amazon-like company. So they hired 2 Amazon executives and trying to make that shift. But again, it's about 2 to 2.5% of the portfolio. Certainly, if GameStop falls, it's not going to be a huge impact on the portfolio, but certainly within the top 10. But that's the beauty of having that risk spread across 90 or so names.
And Stephen, also in those holdings, we see Roblox, which is essentially sort of the future of gaming play here. Walk us through what you're seeing in terms of investing in Roblox as an opportunity and when you expect to start seeing that really pay off.
Yeah, I think Roblox is a great use case in terms of what we might see going forward within, this metaverse and Web 3.0 world, in terms of having an interactive experience, virtual worlds, being able to interact among other people, and the entertainment value and ability to express one's interests and likes and communicate in that way is certainly very interesting. I think it's a test case for what could potentially be the metaverse, which is, I think, is a big question mark now, what it's going to look like, how things are going to operate, how certain companies are going to be able to monetize within that. But Roblox is very interesting, especially in terms of the adoption from kids and now, game developers, which are able to monetize it through their audiences.
Yeah, and given all the uncertainty in the crypto space, how far off is monetization of the Web3 space and of course, to the metaverse as well?
I wish I had a good answer for that. If I did, it'd be a nice crystal ball question to be able to answer. But I think it's decades long out. I think it's going to be a long time before we're able to actually have build out from the likes of Facebook or some of these other bigger companies. But again, it's all about being driven off the blockchain and the content creation and expression to the user, rather than some of these big companies like a Facebook, where the Web 2.0 world is sit with content and data, and then being able to value that and be able to, sell that data. So I think it's a big question mark. I wish I had a better answer for you, but it's another reason why we like this space in general rather than picking an individual stock, to think that the metaverse is going to be a benefit to one name in particular.